Well, while shale exits the shale business, several other energy giants are scaling back operations in the wake of increasing violence in Iraq. And just this evening, President Obama said he stands ready to support the new government in that country and that the U.S. has stepped up military advice to the Iraqis and Kurds.
The past few days, American forces have successfully conducted targeted airstrikes to prevent terrorist forces from advancing on the city of Erbil and to protect American civilians there. Kurdish forces on the ground continue to defend their city, and we've stepped up military advice and assistance to Iraqi and Kurdish forces as they wage the fight against ISIL.
But what do these moves of the energy giants mean for the major oil companies and for oil prices? Jackie DeAngelis reports.
As the situation in northern Iraq remains tense, reports that U.S. oil majors like Chevron, Exxon, and Hess are removing non-essential employees from the region are a concern for the markets. Normally, news like this would cause oil prices to spike, but this time, the markets seem to be acting rationally. That's because of Iraq's 3 million barrels a day of production, only 360,000 come from the north, and only a third of those are exported. Iraq's Ministry of Natural Resources saying this weekend that production in the north hasn't been interrupted.
The south is what we're really worried about. 3 million barrels a day come from there, and if there's any disruption to that supply, it's going to be problems for the rest of the world.
In the Middle East and Iraq specifically, expat workers are no strangers to conflict. Evacuations like this have been seen before, many times just temporary and part of standard operating safety procedures. What draws expats to the region? High salaries. Oil and gas industry workers are paid for the risk that they assume. RigZone says that average salaries are over $90,000, and in some cases where employees have more experience, they can bump into the six-figure range. Also keeping crude prices in check, a balance in supply and demand. Barring any major catastrophes, global supply is on the rise, and demand seasonally in places like China and the United States is weakening.
While geopolitical tensions have eased in certain parts of the world, they still remain a problem with Russia and Iraq in particular. But really in the fourth quarter, demand usually drops, and that could offset any geopolitical tensions.
The good news? Domestic prices for crude have backed off almost 3% in a month, now back below $100 a barrel, and gas prices have declined as well. The Lundberg survey reporting another 6-cent drop in the last 2 weeks, bringing the national average for a gallon of regular to $3.52. So where does crude go from here? Traders say unless geopolitics really explode, crude prices are headed lower. For Nightly Business Report, I'm Jackie DeAngelis.